Hi, everybody. Welcome back to my channel. This is Oliver Wiedmaier at Ollie underscore all caps on Twitter, founder of Voyage Trading Group. Today is September 5th, 2022, and we're going to be discussing what we can expect in the upcoming week starting September 6th. And it is a short trading week because of Labor Day. Okay, here we have the SPY, and we can see that we rejected the 200-day moving average on August 6th, and we had a nasty sell-off after the Fed talk at Jackson Hole. However, we are holding this trend line. So if we zoom in a little bit, we can see we've held the trend line here on 2 wicks. And so if we want to make a bull case, we will have to build a right side of this higher low and then work our way back up and then retest the 200-day moving average. Now, historically, September is a low volume month and it's more of a weaker month. And so this actually does build a nice case that over the next 4 weeks, or I suppose 3 weeks at this point, we work our way back up the 200-day moving average, retest it right into October, which historically is when volume starts to pick back up into the market. And so then that could accelerate us into the next bull run, right as we test the 200-day moving average and it turns from September to October. So if we're going to build a bull case, I'm looking for at least 4 weeks testing around the 200-day and then getting out of September and into October. Now, if we want to make a bear case, then we would quickly, hopefully, and violently take out the June 17th low and then work our way back up. And then again, it could either go on for months and months and months, or it could be sharp decline. And then we quickly regain control and then we work our way back up, hopefully in just a few weeks. And again, looking for a bull run in October. It's not guaranteed, but historically, if you look at the cycles of markets from a volume month by month basis, October historically is when a lot of volume starts to pick back up. So now we'll look at the Qs. And again, we are trading under the 200-day, under the 50-day moving average. So the Qs do have a little bit more resistance overhead than the SPY does, but they tend to move together. So if you are trading only NASDAQ names, then you want to be paying attention to the Qs. Okay, now we'll take a look at the GMMA chart of the Qs, and we can see that the red faster EMAs have dropped below the slower blue EMAs. And if we zoom in a little bit, we'll see that the faster red EMAs haven't even started to turn up again. So we do need to spend a little bit of time trying to turn these red EMAs back up before we can make a case for a bull run in the short term. Okay, now we'll take a look at the QQQs on a weekly chart. We have 2 moving averages. The white moving average is the 30-week moving average, and the purple moving average is the 5-week moving average. And you can see we are trading under both, which means that I am not looking for longs. I'm not even really looking for shorts at this point. I am just kind of hanging out, waiting in cash and seeing what the market is going to do. And if I need to step to the side, I have no problem doing that. Okay, we'll take a look at the VIX. We see last week it spiked a little bit, but it ended the week around 25. 25 is kind of where I would like to see the price under 25, closer to 20, but currently it is hanging out about 25. If it keeps chopping in between 20 and 30, it's just not an environment that I'm interested in trading in. I want it to be holding under 25. So for now, you can see it's going up and down between 20 and 30. It's just not something that I'm interested in. It's just too volatile. Here we are, the put call ratio. We closed the week at 1, which is just too bearish for me. I want it to be closer to, 0.75, even 0.6 or 0.5 perhaps. But what I think is we need some more spikes, some more aggressive spikes. 1.5 would be a really good spike. This March 2020 was 1.5. In 2018, we had a almost 2 put call ratio of 2. And so what I like to see is during this last flush out, we have a nice, strong, constructive flash of the put call ratio, and then work our way back up, and then getting into that bull scenario. Okay, so now that we've taken a look at the indices, I want to take a look at individual industries and see if there's any industries that are either holding up or perhaps the institutions are hiding in. And so we have this filtered by monthly performance, and we can look on the column to the left, and there's only one industry that had a green week, which is uranium. All the other industries sold off terribly bad. So what I'm looking for is on a weekly performance basis and a monthly performance basis that there's money coming into it, there's strength in it. And for right now, we're not seeing that. We are seeing a total sell-off. And so this is, again, just another red flag that now is not a time for me or for us to start putting our money into the market when the institutions are taking their money out of the market. Now we'll take a look at some charts of some sectors and see if there's any strength, or take a look at and see what is happening from a price action standpoint for some of these strong sectors that we like to look at. So the first one is going to be semiconductors. This is SMH, and ideally I want semiconductors to be doing well, which means that the market's going to be doing well. And we can see the semiconductors are selling off just like the rest of the market. We can see we are approaching the July low, and if that gets taken out, then there's a higher probability that the entire market will come down with it. We've seen a lot of strength in solar, so we're going to take a look at TAN, and we can see that we've been selling off. We are still holding that 50-day moving average, which is a really good sign, but it's looking weak. It's looking vulnerable. Another strong sector has been biotech. And again, same thing. We um, are holding that 50-day moving average, but it's looking very weak. And if we break below around 82, there could be a really nasty sell-off in biotech. Okay, now we'll take a look at some individual names to see if the leaders have been able to hold up during this sell-off. So this is Celsius, ticker CELH, and we've actually rejected new highs and we sold down. We broke below the 21-day moving average and then again sold off on Friday and closed at the low. So this is very weak. We have to see how it acts at the 50-day moving average, but it does appear that the buyer or buyers have taken the money out. And again, so this is not good for the overall market when those leaders are start getting sold off and the sectors are getting sold off and everything's trading under key moving averages. It's just a time for us to be in cash. Shockwave, ticker symbol SWAV. It bounced off the 21-day moving average, but on Friday it did close near the lows and on a declining 8 EMA. And so this is something that we need to, again, be paying attention to. This is really strong stock. We big gap ups, holding really good relative strength while the market was selling off, but we can see that it is looking weak now. ENPH, ticker symbol ENPH, closed below the 21-day moving average. Again, huge EPS numbers, huge gap ups, and it's not able to hold. And so we'll just click through a couple more of these, but you'll see a common theme that these tickers symbols that had big gap ups, big earnings, a lot of money, lot of big volume are being sold now. And so that's just another red flag. We have, I don't know how many red flags in this video, 7 or 8 red flags. But this is going to be the last piece of the puzzle for me. It's stocks, sectors, market. And so what I did in this video was go from market to stocks and showing you that across the board, it's red flags. and semiconductor below the 21-day moving average. ARRY closed right on the 21-day moving average. PLAB, this is an unbelievable gap down. Gap down, sliced through the 200-day moving average, and is closing on the lows. So it in a matter of 1, 2, 3, 4, 5, 6 days, it's erased essentially 4 months worth of work. And so that's how quickly these things can change, which is exactly why we need to be trading light, and we need to be trading with stops. GFS, again, closing below that 21-day moving average. ENVX, below the 21-day moving average. RXDX, this is actually making new highs, but I am looking to see how this acts in this type of territory. If there's only one stock that's making new highs, I'm not buying it. No way. Couple more. OXY, this is the Warren Buffett stock. Huge downtrend line breakout here on high volume, and it's looking more and more weak as the market starts to turn. We'll do one more of a golden nugget here. ACLS had this ginormous breakout on this downtrend line, and then the very next day, not only did it make a new high, but it took out the breakout candle, and then it proceeded to sell off. So again, wiping out all of these gains very, very quickly, which is why we need to, again, trade very lightly or don't trade at all. This is just a prime example of how volatile this market is right now. I'm not trading right now. I've done a few shorts, and I'm considering myself lucky. And so what I'm going to do is I'm going to step away for I don't know, a week or two, and then reassess. But please follow me on Twitter if you're not already. Please join the trading group. I'll have all the links down in the description. Have a good night, day, whatever. Later.